We need your support. Click the like buttons below. Now onto the video. Welcome to readtheticker.com. Today we're going to talk about how to catch the big market trends from the big market turns. Like big oil tankers, a market trend turns very slowly and allows the retail trader to participate on this turn because it gives you a chance of a setup. When a big market turn happens, that means supply is moving into demand after a period of consolidation of settling up supply to new demand, and then we see new demand take over. That's the typical accumulation. So the bigger the turn, the bigger the trend, the bigger reward when price breaks out on its new trend. Now, one important indicator of readtheticker.com for Richard Wyckoff logic is the ability to study price action and price trends with the Richard Wyckoff type thinking is the RTT steps indicator. Basically, it's price stepping through resistance and going up on support in a slow but deliberate manner. Let's have a look. So here we have Newcrest Mining, which is an Australian gold stock. The Australian gold stocks forecasted the gold stock rally long before the gold stocks in America ever took off. And as you can imagine, the Australian dollar goes up when American dollar goes down. So it's a double hit, because Australian dollar rising with the Australian gold stock rising is just better rate of return. So here we have, most importantly, RTT steps on quarterly data with those settings there, and the reaction line, that's the dotted line, is at 60%. That's like a 60% retracement from the most recent high, and the band, the green band, is determined by a rate of change, or what's that word, average true range. That's correct. Now, so therefore, if demand is present, you're going to find that price holds above the 60% pullback and trends upwards. And if demand falters, supply will break that line and show ill discipline as it comes out of here. Here's a typical example of price breaking through too much supply, and then it reforms itself, and once again the 60% pullback holds and the trend comes in. And it's these areas here, like to apply your Wyckoff logic to prove that supply has been overcome by demand. As you can see here, the 60% pullback line is like a demand line. It's like the Maginot liner where demand steps up and defends its position. And as you can see here, it's a perfect relationship. We've got lots of supply points. These are the down bars where suppliers come in. Adjustments of positions, I would call that. Here's the volume there. So this is a quarterly indicator. Sorry, this is a quarterly chart with quarterly bars on a quarterly indicator. Now, a lot of stock programs don't even have that, so the reason why it's good to use quarterly bars is because it's, as I showed you with the big turning ship, big trends and big turns produce big profits. And we can obviously scroll down and look at the same price action. Here we have the same indicator. It's a quarterly indicator, but it's got monthly bars, so it's a multi-time frame indicator, and there I put down a few momentum tools and a few other on-balance volume type products we use in the Wyckoff thing. But more importantly, like I said before, to catch the big turns, you need a big boat to watch, so I use big bars to see the big turns. And as these are quarterlies, these are 3 months of bars, so you know demand and supply is working well. Why is this important? Why bother use quarterly data? Why bother going for it? Is because the large accounts take a lot of time to adjust their positions. They don't do it in a week or two. They'll be over a 6 month period to adjust their positions, because they want to get the best true average cost. That's why quarterly bars and quarterly indicators are important, because even though your retail traders might be stuck in a 10-minute or 60-minute or 1 day or a week or a monthly, the truth is quarterly bars shows off the big players' activity, because it takes them that long to get their positions set up, adjusted, or what have you. Right, now let's show you a situation. This is a tidy situation where it goes from good trending upwards, a bit of supply recovery, well defended, and then there's a breakdown, and here's the true demand coming in. Obviously the 60% line works perfectly. Let's have another look at a situation. Let's have a look at gold, because we're looking at a gold stock. Look at GLD. Now GLD is obviously the gold ETF, and the volume on the GLD is a good representation for Wyckoff logic. So here we have our quarterly bars on our quarterly indicator of RTT steps. As you can see, price is stepping up. The dotted line shows the demand is in control, and we show the weakness coming in here, and obviously there's a massive breakdown there. Totally no demand, no defense. You have to wait till the pattern reforms, because the big boys take a long time to readjust themselves. And as we can see here, the demand slowly proves itself here. Alright. And obviously after a period of time we see the supply, demand overcoming supply. And of course you can look at that in the monthly picture here with your indicators down there. So from about this point onwards, the big boys knew that the prices, that gold was going to break out, because they used this down rally here to accumulate, keep their overage cost in the next few months. So I think it's going easily to 1500, probably 1700. Well, I've got 1700, it's actually 170, which is the proxy for gold. Okay, so that's easy. Let's have a look at, what we don't do Bitcoin, do we? Okay, I hear you screaming, yes. We use Bitcoin timestamp, quarterly data. Obviously it was in a nice situation here. It was sideways. It started to go to the 60% line here. It took off. You see how it didn't hold the 60% line here? The supply was too strong. Little breakdown, and now we had a recovery, and the buy point was just over 5,000. Or I wouldn't say, but you show the demand really turned up. So now we're at the outside end of the range. So we'll probably have we'll probably hold up here above the 9,000. Okay, the monthly chart. You saw the period where demand really stepped up. 60% line was holding. Well forecasted. US dollar. Okay, once more the US dollar. DXY, that's a US dollar proxy, I think. Okay, this has not been updated for today's activity because it's an end of day activity. As we can see here, the demand held strong here, so it was very hard to be bearish US dollar. It broke down here, tested the outer band. Okay, so I would say we find that the 60%, it shows where the demand is strong. The last defense for the trend of the bullish trend is the outer band. Okay, so as you see it recover, that's holding up there. A bit lackluster because it hasn't really punched up. And obviously it's come down a bit since this chart's been drawn. But you can see the trend here. It'd be pretty hard to be bearish US dollar from all this period of time. Okay, one more. It's Amazon. Well, it's obviously going to be bullish all the way, isn't it? But obviously when you're looking at a chart like this, the quarterly red bars can be fantastic buy decisions or buy points. Because obviously when you have quarterly bars which are rare, see, look at this. Perfect demand all the way up. Some quarterly red bars which are down, obviously buy points if you're wishing to accumulate. Even that massive drop from there to there was well recovered, so it was a buy point. And we have to wait to the end of the quarter to see how it holds up with this red bar if you want to go and take involved in a long Amazon. Because obviously we have to wait and see, because we've got this is we're in August now, so we've got another month of the quarter to go. And as you can scroll down here to see what's going on with a few momentum indicators. So we need momentum to improve on a monthly basis. So I would, if I were you, become a member of readtheticker.com, and you're a Wyckoff fan, I want to see the big ships move to catch the big trends, true support and resistance. And if you have, was it volume spread analysis? Obviously volume spread analysis on the quarterly action is obviously more meaningful than anything else. Thanks very much for watching.